Well, joining me now in studio to give us his take on the market's activity is Jordan Toy from Legacy Family Wealth. Hi, Jordan. Good to have you with us on Business Lunch. A relatively flat day today because, there's Thanksgiving in the United States. What else are you seeing?
Yeah, so I think you've touched on it correctly there. With the US on holiday, there's a little bit less volume in currency markets. Obviously, quite a few results coming out on the local front today, so still some volume there. But this week felt like it has been driven pretty much solely by changes in views on the upcoming Fed meeting in December, and sort of big swing from about a week ago or 2 weeks ago from a 30% chance of a cut all the way up to sort of 80% today. So that, combined with a bit of news out of Google and Meta and some semiconductor related stuff, seems to be driving a lot of global markets this week.
Right, Soho Sun, good results. A bit of caution there. I've seen what they've been doing, but good results.
Yeah, so obviously SA's largest, or one of the largest gambling operators in the country, blend of casinos, limited payout slot machines. So I think, considering the environment that traditional brick and mortar casinos are operating in, it's a reasonable set of results, sort of revenues largely flat, earnings also relatively flat. But when we look at the rise of online gambling, which I've specifically taken a look at the gambling sort of industry report that came out covering the previous year, you're seeing a massive surge in online gambling. And I think the likes of the Hollywood Bets, Betway, the sort of first to market, or have taken a lot of market share in that space. And you're seeing the traditional casino operators trying to catch up, which Soho Sun seems to have done quite well. A lot of pleasing numbers out of their online gambling segment there. But a decent set of results considering that environment. I do think that there may be a regulatory overhang, possibly more on the online gambling side of things. We know that there's been talk of Treasury recently imposing a tax on that front. I do question sort of the advertising spend is significant from some of these online betting businesses. So I think there is a bit of a regulatory risk to watch out for there. Clearly, Treasury taking note of it with that potential tax that they mentioned. I don't know if that's necessarily workable. I also question whether that actually solves the issue of how much disposable income is being spent on online gambling. I don't think a tax necessarily deals with that problem.
Yeah, just a bit of a problem with NSFAS. We have youngsters getting their money for varsity and they go gambling. It's never been a good move.
Exactly.
Right, Life Healthcare, their results are out today. They've been offloading all sorts of assets. Their spend has been more sometimes than what they've been getting in. What are you seeing?
Well, I know that you'll be speaking to the CEO a little bit later, so I'll leave the majority of the talking points for him to address. But one of the big three private healthcare operators in South Africa, as you touched on there, they've largely exited their offshore businesses, and in the process, there's still some sort of earn-outs and things of that nature for their German, Life Molecular Imaging business. So it seems to be another case of sort of one of our local businesses looking at the offshore space and potentially trying to pursue growth there. Changing position now to refocus on their core market, being South African hospitals. And as you said, spending some capex there, some new hospitals coming online. I think, and you mentioned it in your intro there, pleasing to see, you need patients in beds. That's key for hospitals. You need elective surgeries. You need more utilization of your specialists and your facilities. And I think across the board, we're seeing some of that come through in their results. Interesting to see that the share price slightly down today. Clearly a bit of disappointment on some of the fronts for investors there. But I think a decent set of results. We'd need to see how the sort of refocus on SA proceeds. But I'm sure the CEO will shed some more light on that in a little bit.
He will indeed. Right, Nampak also making news headlines.
Yes, so a bit of an interesting one for me. A lot of one-offs. It is only a trading statement, so we're going to have to see what the full results look like. But obviously, earnings per share, headline earnings per share from continuing and total operations up very strongly, sort of north of 100% in the case of total operations. But as I said, a number of one-offs. I was looking at it earlier. You had, significant interest cost reductions, pension surpluses, outstanding COVID-19 insurance claims that you mentioned. So I think it's going to be key to see sort of what, once you strip off all of these one-offs, what does the actual business underneath that look like? A difficult one to read into. Obviously, the headline figure is very strong out of Nampak today on that trading statement.
Something I want to pick your brain on, the UK budget. Now, we got Rachel Reeves. You've got Labour. Labour saying they don't want to increase taxes. First of all, we'll never do this. They do it once. And we said, no, it's only once. Now they've done it again. It's a rock and a hard place. The markets did like it. I did notice that. But what's your take?
Yeah, really interesting one for me. I mean, you talk about a rock and a hard place. I described it earlier as walking a tightrope, but it feels like that tightrope is razor thin for Rachel Reeves, and not a job I envy. I think so many conflicting goals, right? So as you mentioned, Labour Party, you want to try and play into what your constituents' wish lists are and what you were ultimately, her and the Prime Minister were elected based on, which is, and we had some of that come through. So I believe one of the key points was welfare was limited previously to families who had 2 children. Now that's been lifted. But you have these competing priorities, right? So they want to spend more, but they also now need to raise taxes to fund that. And the major risk for them is you're seeing increasingly the wealthy leaving the UK. So we had the non-dom tax, without unpacking that. But you're having your sort of tax base somewhat eroding, and you have increased fiscal pressure. So how do you manage that? We saw the mansion tax, or the so-called mansion tax. I know that they're not referring to it as that, but colloquially we'll call it the mansion tax. So they're looking at, where are these places that they can get some of these taxes. Obviously, some of the wealthy are not looking to sell some of their properties, so they're going to raise some additional taxes there. I think, I had mixed reactions. So I saw some commentators were positive on it, some negative. We'll have to see how it plays out, because a lot of these taxes are, kicking in from 2026, 2027, and so on. So we'll see, but it is a very tight fiscal situation, and do you have that tax base continuing to erode, and you start getting into a position where you might need to actually cut spending in some specific areas and then disappoint more of your constituents. We know that, I think I heard it on the way here, that sort of the popularity for both her and the Prime Minister are sort of record lows across any sort of government.
Well, when you take over a government, this is what happens. And there's taxes, and you have to pay the bills, don't you? Hold that thought. So before we move on to your stock pick, let's take a moment to touch on which counters your industry peers are watching closely.
It's a value offering in the picks and shovel of the AI space, right? So none of these GPUs, these fancy accelerators that Google and NVIDIA are building, can operate or process without the data to feed them, right? So otherwise you've just got them standing there being throttled. So memory and the capacity to transfer data from memory into the processors and back again is a critical piece of that whole AI build-out infrastructure. SK Hynix is the market leader globally. They have about a 60% market share. There's Micron is also there. You're getting on around 8 times next year's earnings. It is more cyclical, but if you think this AI cycle is going to be more protracted, this build out, and it's not about who wins, because all winners need the memory. It's not just if NVIDIA wins and Google, or if Google wins, then they win. The whole build out requires the memory. So this is a cheap way, maybe lower risk value play into that picks and shovels of the AI build out.
It is summer. I'm sitting in Cape Town, and it's most probably about 30 odd degrees again. So, maybe I'm just talking my book. No, it's one of these companies that have been under pressure. We've seen again today in a market where we've seen a strong market. We've seen Anheuser-Busch being under pressure, and I think for good reason. There was recent updates have shown people are drinking less beer. But I still believe, I started this program off by saying that I like to go defensive, and Anheuser-Busch at these current valuations, never been a company that's been phenomenally cheap. But nowadays, when you look at the forward P of below 15 times, they're sitting with a great cash flow, $6 billion worth of buybacks that they've done the past 24 months.
Right, so we got 2 there. We got 2 stocks. Let's start with AB InBev. Your thoughts?
I think your guest touched on the key points there, right? Sort of a mature, established company, more maybe defensive elements of the portfolio. I think it is a solid business. Some notable missteps recently, sort of some of their brands falling out of favor. But you have such a big portfolio of brands sitting in AB InBev that you have a nice diverse base. I think key for me in the longer term trend, and we're talking not a year here, we're talking sort of 5-10 years, and your guest touched on it there, is sort of the shift away from beer. Does that persist? Are they bringing new products to market or acquiring new products that fill other spaces and alternatives to beer to sort of maintain that market share across their brand portfolio? But all in all, I think a solid business.
A solid equity. Right, SK Hynix.
SK Hynix, an interesting one. Your guest there touched on picks and shovels, definitely the case for SK Hynix. It's interesting to me that in sort of that high bandwidth memory space, you have SK Hynix and Samsung and Micron. But 2 of the 3 are sitting are both South Korean businesses. Samsung used to be a much bigger player and a much sort of more of a front runner than they have been. SK Hynix has increasingly sort of taken market share off of Samsung. I think that they are the market leader in that space. Obviously, a play that's heavily linked to the AI trade. So picks and shovels, the same as NVIDIA in a lot of ways. You need that momentum to continue. I think there's a lot of optimism baked into that share price. So I think a good business. Is the valuation as good? That's a whole nother question.
Wait and see what happens. Right, your stock pick.
So my stock pick today, I wanted to talk about Alphabet, or primarily Google. I think, as we touched on a little earlier, it's obviously been very topical. It's been driving a lot of market news this week. I think it's a little bit overblown. As bullish as I am on Alphabet and Google, I think the news between Meta potentially using some of Alphabet's chips, I think that's a little bit overdone. I do think NVIDIA is still, as Jensen Huang put it, a generation ahead of their competitors.
Sure.
But I think we forget the other areas that Google has in their business. I mean, YouTube for me is an increasing play in the media space, and quite unique compared to the likes of a Disney Plus or a Netflix. So you have this element of the business which is very, very strong. And the one that I'm focusing on as a potential risk is Google search, right? So just anecdotally, myself personally, when ChatGPT and some of these large language models came out, I kind of went, no, it can't replace Google search. And within about 6 months, I've changed my view on that. I think primarily a lot of my search has shifted onto these large language models. So what does that look like for Google? Because the vast majority of their revenue is search-based. So best believe that the team at Google is sitting there looking at it closely. I mean, Gemini is one of the leaders in that space.
Yeah.
But that's the key transition to watch. Is it's a big part of their revenue. What does the future look like if 5-10 years from now, Google search is no longer the primary way that we get our information?
Well, you're the second person this week to name Alphabet, so there's got to be something there. There has to be. Jordan, thank you so much. Appreciate you taking the time to come in today and chat to us. That was Jordan Toy from Legacy Family Wealth.